Welcome to Family Business World. I'm Dr. Dale Caldwell, your host, and today we have the honor of having one of the most influential people in the financial world in New Jersey, Alan Sobel. Alan, welcome.
Good morning, Dale. Thank you.
It's an honor to have you here, and Alan is the managing member of SobelCo, LLC, which is one of the, as I said, most influential and wonderful accounting firms. And so Alan, first I always like to begin with origin stories. So did you grow up in New Jersey, or where did you grow up, and how did you end up being in the financial world?
So I did grow up in New Jersey, Dale. I grew up in Livingston, New Jersey. Basically spent my entire youth there before going to college. I grew up in town and continue to actually work there. My offices are in Livingston to this day, even though I don't live in Livingston.
Right.
I guess I got into the financial world not realizing it at the time, but my father was a CPA.
Okay.
And actually started SobelCo. And after a little bit of a journey of college and then working outside of his firm, I came back to New Jersey after living in Boston and returned to New Jersey in 1987.
Wow. So
been here
you
for quite a time since then.
Wow. This really is a family business, and you work with family businesses. So did you go to college in New Jersey, or where did you go to college and do your education?
No, I didn't. Actually, I left New Jersey. My desire was actually to be in the Boston area,
okay.
And I wound up going to Bentley University.
Okay, nice.
It was Bentley College at the time, which is in Waltham, Massachusetts. Had an incredible 4 years there, and actually, Dale, my goal was never to be a CPA. I always wanted to be a business owner. I had an entrepreneurial spirit in me,
right.
And that's kind of what I looked to pursue. But I was told early on when I was I guess I did a vocational test, and they told me that even though I wanted to be in business, they said, go study accounting because it's the language of business. So off to Bentley I went, which was extremely well known for its accounting program. And basically spent 4 years there. Decided, not knowing what I was going to do with my career, I talked to some career counselors, and they said, well, why don't you go into public accounting? You'll see a lot of diversity in business. You'll begin to understand how businesses operate, and then you can decide what business you're most interested in. Well, I wound up working for a very entrepreneurial firm outside of Boston in Quincy, Massachusetts. And I was the first person they hired out of college. I was the 23rd hire of the company.
Wow.
4 years later, we were about 75 people, and I was a manager in the firm.
Wow.
Fast track to becoming partner. But what I discovered along the way is there is this business called public accounting. And so I actually get to combine my two great passions, which is being a business owner, and I also get to help entrepreneurial businesses. So it's really the perfect scenario for me. It's proven that way for the last 38 years.
Well, and you obviously started when you were 10, right? If it's 38 years, so you must have been really young.
Yeah, exactly.
But what I really like about you is clearly you love this stuff. You love doing this. But the reason I go to origin stories and other things is that we have people of all ages watching. And so there's some, I teach at Fairleigh Dickinson University, so there's some college-age kids saying, what am I going to do with my career? There are people who are early in their career. There are people who are near retirement. So it's good to really hear those stories. So the scenario is you're doing really well in Boston, with this firm. Why are you going to leave that to come to the family firm in New Jersey?
Well, it's something called marriage. I wound up marrying. We've been married for 35 years. My high school sweetheart, who moved up to Boston to be with me and to venture out on her own career. But both of our families were back in New Jersey, and essentially she wanted to be closer to family when we decided to raise a family. And I was at a pivotal point in my career, and as much as I believe to this day I'd still be at the same firm because I loved it, even though they've morphed it into a much larger organization.
Right.
I think I'd still be there because I did enjoy it so much.
Right.
But family brought me back to New Jersey, and I often say that New Jersey's home. It's home to so many people, and everybody talks about other parts of the country and this, that, and the other thing, and how many people are leaving New Jersey. But the truth of the matter is, it's home to so many of us, and we love it here. And so we came back.
Wonderful. And so you started with your dad? You started with your dad as a partner, or how did that transition work?
Yeah, so interestingly enough, I never thought, Dale, that I would ever work for my father. It was the last thing in the world I wanted to do. I love my father dearly, but we are kind of polar opposites when it comes to management styles. And I honestly didn't think that I ever would want to work for him. My brother was also at the firm at the time.
Oh, okay.
And so, I met with them because coming back to New Jersey, I had to make a choice. What was I going to do? And I had interviewed with at least one other firm. But my dad had a very important conversation with me. And he said, and I remember these words vividly, he says, Alan, I don't want you to work for me. I want you to work with me.
Good.
And with my brother and my other partner to this day, Mike LaForge, and we had conversations and we talked about building upon what my dad started. And so my entrepreneurial spirit once again kicked in, and I saw an opportunity because none of my other partners were really interested in the business side of the business. They were much more interested in the client service side of things.
Right.
And so for me, it created a great opportunity to kind of take this platform and to build upon it. And I think we were about 12 people when I started with the firm, 12 or 13 people. We're now up to about 170.
Wow.
So we've had a pretty good run in this period of time.
Hey, Alan, family businesses are so important to society and so important to the economy, and you are a family business and you work with family businesses. Why is it you think that society doesn't really value family businesses to the extent that they really should?
It's a great question, Dale, and I really don't know the answer why they don't get the recognition that they do. I guess in part it's because they're small and so they don't capture the headlines like big corporations do. And while there have been some family businesses, that have evolved into major corporations, like for example here in New Jersey, we have M&M Mars, right? One of the largest family-owned businesses that exist out there. Most family businesses are small and mid-sized business companies. And so I just don't think they capture the headlines, but they really truly are the backbone of our economy. They employ more people than large corporations do. They are creative and they serve the local communities as well as, the bigger nation. So I'm not sure why they don't get the attention that they deserve, other than maybe we're so busy as family businesses working on our business and dealing with the day-to-day aspects that, we don't have big PR firms that are out there promoting us the way that we should.
Right.
But clearly we need to recognize that family businesses do a lot for us and celebrate the successes they have. And I applaud you. I applaud the Rothman Institute for all they're doing to bring spotlights to family businesses, because it truly is an important element of our economy and our society.
Well, we're truly blessed to have supporters and sponsors like you and SobelCo, and we've just had it's just been a wonderful working relationship with you and Sally Glick and your team. It really is a wonderful team, and so I've done a lot of consulting through my career, and not to build you up too much, but you can tell the culture of an organization. You can tell, I didn't have to meet you to know the culture of your organization. I mean, you are, it's very people friendly, very people oriented, very, very caring, very concerning, and very genuine. And so before I met you, and Sally, is just a wonderful representative, I knew that's who you are, and the more I get to know you, the more I realize, well, that's why the culture is what it is. It really is amazing how the culture really mirrors its leader. And so you have outliers every now and then, but do you do anything to kind of foster that culture of collaboration and community?
We work very hard at it, Dale, very, very hard. It's embedded first and foremost in our core values. We branded our core values with the word encourage. Each letter stands for a lot of different things, but the C in encourage stands for care for your people and your community, and that's something that we do on a regular basis. Listen, we're only as strong as our people, and our weakest link can bring us down. And so, we do have to put a lot of attention and focus on our people, and we do care about them, not just professionally, but personally as well. And, it's funny, you say it's a family business, and yes, my father founded the firm. My brother was a partner of ours until, unfortunately, he passed away. And there's other family in the firm. My daughter now works for the firm, and we have other employees who work there. But in any organization, family is only an opening of the door, right? You still have to perform, and you still have to live up to the standards of everybody else. But what we really pride ourselves on is when people describe us, our own people describe us, they say it has a feel like a family culture. It has that sort of family feel to it. And yes, we do work very hard at it. We're including our families in our events. So we will have whether it's a picnic or a barbecue or an after-tax season party, where we invite our families to attend. We make sure that our end-of-the-year holiday party includes spouses or significant others because we want it to be inclusive. We know that our people work very hard and they grind themselves to a degree, but it is the children and the spouses and the loved ones that are back at home who are the ones who are really making the sacrifices because mom or dad are not at home with them. And so we do what we can to try to foster that family environment as best as we possibly can. Sometimes we're not successful, but most of the time I think we do a good job of it.
You do an extraordinary job, and one of the things that I'm actually writing about, and I'm going to do some articles in a book around this idea that I call coach leadership. That the new world is transitioning from this command and control where people say jump and you say how high, to this idea of really valuing the person. And if you're going to lead, you really have to make sure that your people are developed and they know that you care about their well-being and growth. And that's what you have. So you really, to put a label on it, you really have created a coach leader culture. Does that make sense? Do you agree with that statement?
Totally makes sense. One of the things that I'm trying to create as well is instead of a hierarchical, boss subordinate type of relationship, I constantly try to create something that's a little bit more cylindrical in nature. That we surround our client with all sorts of people that have, that contribute to the client experience. That you don't have to be the partner to be the only one who talks to a client. That everybody plays a role, and that we avoid trying to create this situation. And we all, to your point about coaching and things like that, we can all learn from each other. I have learned so much from our younger staff at our firm, just in the way that they go about working and how they adopt technology and just their viewpoint on the world. They question things, and I love that. And so we can all learn from each other. It doesn't have to be in a hierarchical type of an arrangement.
Well, and one of the things, again, I wrote a book on influence called Intelligent Influence, and that we're all products of our influence. And so the different generations are products of their influence. And so now I'm sure you're seeing you have multiple generations there who have to be coached, influenced, led very differently. And so, you have a new generation coming through, which is very different. I spent 11 years at Deloitte. I was on the consulting side. I'm not a CPA, I'm an MBA. And so the culture of accounting firms really is, for the ones that care, is really, really very, very positive. And so we have about a minute or so before we take the break, but I want to get into really talking about the regulations, requirements, taxes for families, small and family businesses. And it seems like they're somewhat onerous for the small family business, that they have to report the same way the major companies do. Is that a fair assumption? And so they need to hire someone like you to really help them through a lot of the regulation and paperwork. Is that true?
Well, it's definitely true. And I guess this is a little bit selfish on my part. Regulations are good for my business because we help people navigate through them. Mm-hmm. They're not necessarily good for business as a general rule. And I am a believer in simplification. But our economy is very complex. And I don't know how you create simplicity in our economy. But there are two elements that complication comes in financial reporting to banks and to other users of financial statements. There is definitely not a differentiation between what they call big gap and small gap, financial reporting standards for big companies and small companies. We're starting to move more towards that, but as a general rule, the rules apply to both, and that creates a lot of extra work and complexity for small and mid-sized businesses. And then certainly in the tax world, which everybody knows, taxes are incredibly complex, and they're getting more complex every single day. I mean, there's a lot of talk, which maybe we'll get into later, on the Biden proposals,
right,
which is going to add more complexity to the tax code, which we help companies navigate. But it's hard on us. It's taxing on us as a firm, and it's taxing on, no pun intended, on businesses as well.
Right. And so one of the things that I've often said, and we're not going to redefine tax policy, is that there's always this discussion of and we're going to take a break in a second, but I want you to think about this, about raising taxes on the very wealthy or cutting taxes on the wealthy. And I often say, why don't we reduce taxes on the job creators and increase taxes on the folks that aren't creating jobs? So we're going to take a commercial break now, and then I want to get back and talk about that after the break. We'll see you in a few minutes.
Boardwalks built for fun. Legendary rock and roll clubs.
This is how we do it. Hippity hop.
Casinos by the ocean.
Hippity hop.
Now that's New Jersey. 130 miles of beautiful beaches. Solid rock. And everything in between.
Look in the window.
Now that's New Jersey. Plan your New Jersey trip at visitnj.org. Waves of fun. Nights of excitement. And a trail of memories. Now that's New Jersey.
This plus this equals this plus this and this. Don't drink and drive.
Welcome back to Family Business World. I'm your host, Dr. Dale Caldwell, with Alan Sobel of SobelCo. And before the break, we were talking about taxes. And so often there are groups that want to increase taxes on the very wealthy. There are groups that want to decrease taxes on the very wealthy. And so one of the things we were talking about is, why not reduce taxes on those that are creating jobs and keep the same or increase taxes on those that aren't creating jobs? And Alan, we've talked about this. What are your thoughts on something like that?
Well, Dale, as you and I have discussed, I believe very strongly that job creation is the key to economic freedom for so many people. Mm-hmm. You cannot raise the livelihood, the standard of living for people, unless you give them a good paying job. And you can't give them a good paying job unless you create an environment where businesses are incentivized to hire them versus not hire them. And so I feel very strongly that our tax policies should be written to help businesses to succeed and to grow their employee base. And then ultimately, everybody's talking, we've heard over the years this notion of trickle down economics. And I don't want to get into a debate whether it works or doesn't work, because you could argue both sides of that equation. Mm-hmm. But I do believe that it works when you hire people and you give them a job and the opportunity to succeed. And so I do believe very strongly that our tax policies should incentivize businesses not disincentivize them to hire people.
Yeah, well, very, very well said. Very, very well said. Because I think trickle-down economics doesn't work when nobody's really when we just trust people to do stuff. But when policy does it and it trickles down to new jobs, then it works perfectly well. So that's a great. So what size businesses? What's kind of the smallest size in revenue or employees that you typically work with at SobelCo?
So a lot of it depends. It's a little bit more about the makeup of the company than the size. So if we have a startup business, they might be pre-revenue and have a great plan and are looking to develop a new business and grow.
Wow. Okay.
And then we have companies that are in excess of $500 million in revenues as well. So it really runs the full gambit. What I will say is the commonality between our clients is they tend to be entrepreneurial in spirit and growth. We don't represent public companies, at least we don't on the accounting side of things. We don't do audits of public companies. We've decided to stay away from that work because of risk and competencies that need to be created. But if they have an entrepreneurial twist to them, whether it's a startup company or it's a more mature company, we will do it. We're not necessarily well suited for a company that just is very, very small and needs rudimentary accounting services, because our value proposition at the end of the day is to be a trusted advisor. And so to the extent that we do that, to the extent that we can have enough budget, if you will, in our fee structure to be able to do that, we can be successful. If it's just pure, accounting services, then typically we're not the best suited for those type of companies.
Do you work with nonprofits, larger nonprofits as well?
We do. So our business breaks down into a couple of segments, and our largest specific industry segment, is the nonprofit community.
Oh, really?
It's a huge part of our business.
Oh, interesting.
And actually blends very well with our values as a firm. As we said earlier on, we want to care about our community. And while it is a business for us, we start there as it's a business proposition. We also use that opportunity to help nonprofits succeed and grow, either through our own, philanthropy or through volunteering our services and our times to help these organizations. But I want to be clear, it's a core business for us. We don't do it for charitable purposes. We do it because economically it's a good business segment for us to work with.
Wonderful, wonderful. So as you advise some of the small business owners, some of the small family business owners, what kind of basic tax mistakes have you seen, and what should these businesses do to really be prepared for tax planning and tax, and tax approach?
So I think that what businesses probably do what they don't do that they should do is a little bit more forward planning. I think that businesses tend to be very transactional in nature and are looking at what's in front of them today. So there's some really key areas that I would love to see businesses spend more time focused on. And these are conversations that we really push upon our clientele. Things like succession. How do you ensure that when you succeed the firm to the next generation, the family business to the next generation, that you're minimizing your estate taxes, which could, in essence, could cripple a company? I mean, if you think about having to pay out potentially 40% of the value of the business in taxes, how are you going to finance that? So what can you do to minimize that estate tax bite and plan ahead for it so that you don't get, sort of surprised when somebody either prematurely or with a lack of planning passes away. The other thing is a little bit, on the equipment side of things. So planning for equipment purchases, there are some really great incentives in the tax code for accelerated depreciation. So planning for that is another thing we spend time talking to clients about. Form of business is an important element that is oftentimes overlooked. Everybody's knee-jerk reaction is to form their business as an LLC.
Right.
Well, the tax code now might actually favor other forms of business, like a subchapter S corporation, or even potentially a C corporation, which is usually not the most favorable form of business because of its double taxation. But there are elements of the tax code that actually favor that business if you're going to sell that business within the next 5 or after 5 years. So there's a lot of planning on structure that I think is often overlooked that we do spend a lot of time talking to clients about.
Well, it's funny you mentioned that, because I have talked to a lot of companies that, we all, automatically got into the LLC thing, limited liability and so, but now Subchapter S is different. And so it used to be, and I guess I'm aging myself, it used to be 25, shareholders or fewer. Now it's up to a much higher number. What are some of the advantages of Subchapter S now that have changed over the last decade?
So there are a couple. One is, for example, if you're an LLC and you work in the business, 100% of your income is subject to the self-employment tax. That's the FICA and Medicare tax that employees pay.
Right.
So when you're self-employed, and if you're an owner of an LLC, you are deemed to be self-employed, you're responsible for paying both sides of the tax.
Wow.
So that is on the Medicare tax is 2.9%. On the Social Security tax, it's 12.4%.
Wow.
And so being a Subchapter S corporation, you only still get taxed on your wages for Social Security and Medicare, but as an LLC, you get taxed on both. So that is one advantage to being an S corporation. There is talk about, in the Biden tax proposal, there's talk about increasing taxes on earners greater than $400,000 for Social Security, bringing the Social Security back. It phases out now at about $145,000. They're talking about bringing it back for people that make more than $400,000. If you're an LLC, for example, that would increase your tax by as much as 12.4%.
Wow.
If you're an S corporation and you don't take it out in wages, you may actually defer or avoid that coming out in that regard.
Interesting.
Another thing, I just came upon this, Dale, and we don't, like I said, sometimes you have to think forward about planning.
Right.
And an S corporation gives you some greater options relative to taxation in a in a sale of your business.
Okay.
So you can actually have a stock sale, which may be more favorable from a tax perspective than an asset sale, which may result in higher taxes.
Right.
So that's another reason to potentially consider being an S corporation. I just worked with a client of converting from an LLC to an S corporation because they are contemplating an exit maybe in the next 3 to 4 years, and this gives them greater negotiating leverage because they have the ability to do a stock transaction. Those are two examples of where an S corporation could be more advantageous than an LLC.
And those are wonderful examples as to why companies should be turning to a SobelCo to really say, hey, where am I? What am I? What makes sense now? Because the financial world, the tax world seems to be changing a lot. And it's about to change some more, I suspect, with the new administration and the Biden administration and so on. And so every time we have a new presidential administration, there are typically some major tax changes. So what are some of the things people should look out for that you anticipate may happen with this administration?
Well, so everything I'm about to say is all speculative because the truth of the matter is we just don't know what's going to happen.
Right.
With a divided government and no clear majority in the Senate, I'm just not sure what can get done, if anything. I do think that rates are going to go up. I just don't think we can sustain the spending that took place under COVID, coupled with the tax cuts that took place in 2017, and have a sustainable, I don't want to say economy, but our debt's just going to is growing out of control, and I don't think that's sustainable. That's just my personal view. So I do think that there are going to be some tax increases. I think it's pretty clear you're going to see the corporate tax rate go up. Currently it's at 21%. The talk of the Biden administration like to bring it to 28%. I think it's probably going to settle somewhere in between. Joe Manchin has indicated his willingness to do that. I do think that what probably makes better sense is to try to create some form of a minimum tax on corporations.
Right.
Corporations are very good. They hire good CPAs like myself and the other 14,000 CPAs in the state of New Jersey who are excellent to help them work through the rules. But they are using services of this country and the roads and the infrastructure.
Exactly.
They're using the education system to hire people. It's probably only fair that they pay something. So I suspect that you'll see some form of a minimum tax that will kick in as well. On the individual side, President Biden has made it clear that he wants to increase the capital gains rate. I personally think it would be very, very harmful to the economy to increase it to the 39% that he's talking about.
Right.
I think that just going from what effectively right now is about 23% a capital gains tax rate and bringing it to almost 43%
Wow.
would be
Wow.
very, very harmful. And I would hope and I believe that they'll settle with something less than that. That's my hope. At one point, I think, I may be wrong on this, I think it might have been the Reagan administration, the capital gain rate was about 28%. And I think that's probably where it will wind up settling out at the end of the day, something in that range. I mentioned the the Social Security tax going up. I think that's going to hurt particularly people in New Jersey, where you could have two people in a family, a husband and a wife, who are working and each making $200,000, and all of a sudden now they're going to be subject to a higher Medicare tax, Social Security tax. I think that's going to be a very, very difficult tax for a lot of people to swallow.
Yeah.
You think about somebody making $500,000 and having to pay an extra $15,000 or $13,000 in tax.
Yeah.
That's a lot of money when you live in this area. I mean, it's hard to on $500,000. And I'm not, believe me, I am not sitting here. You can raise a family very nice in our state at that kind of level, but your lifestyle kind of matches what your earnings are, and to have to pay an additional $15,000 a year in taxes could easily affect a lot of people. So I think that's one that could be difficult for people to swallow.
Well, Alan, unfortunately, we're at the end of time for the show, and just want to thank you. I really enjoy our discussions all the time. I thank you for coming on. And SobelCo, what's your website if people want to reach out to you and find SobelCo? What's your website?
Sure. It's www.sobelcollc.com.
Wonderful.
That's SobelCoLLC.com.
Excellent. So Alan, take care. Have a good one. I look forward to catching up next time. And I want to thank all of you for watching. We will see you next week on Family Business World. Take care. Bye-bye.